Hi, I'm Barry Clark. Welcome to the Mortgage and Property Podcast, brought to you by Mortgage Monster. Now sit back, relax and get ready for top tips, tricks and advice to help you with all of your mortgage and property needs. So welcome to the Mortgage and Property Podcast. Today we're talking about buying schemes. Today we're joined by Adam, our digital marketing manager, who's going to be asking all of the questions and asking about schemes basically.
I am.
How are you, Adam? Are you all right today?
I'm not too bad, but I did get bamboozled today.
How did you get bamboozled?
Well, Barry, I came in the office today.
Well, it's not me, right? First of all, it wasn't me, but go on.
Yeah, I came in the office today.
Yeah, dressed as
Spider-Man.
Okay, brilliant.
Because I was under
just
the
you,
impression.
Or was it?
It was the whole marketing team. So myself, Chris, and Luther.
Yep.
We all came in as superheroes.
Yep.
Thinking that everyone was going to be a superhero today. Unfortunately, this wasn't the case.
Mate, you are all superheroes. So that is the point that we're trying to make. You are all superheroes, and we're very proud of you.
Yeah. Well, maybe someone else can take my superpowers.
So, aside from that, you obviously got to change now. Dressed as Spider-Man. Your day gone all right?
Yeah, not too bad.
All right, cool. So let's talk about buying schemes. Let's see if we can help out everybody and talk through all the different types, all the different ones there are, and just give everyone a bit of a clearer understanding as to how they all work.
Yes.
So I know you've got a long list in there and some questions.
Well,
so should we just crack straight on?
Yeah. All right. The first one I'll ask you about is the first home scheme. So tell me a little bit about that.
All right. So the first home scheme is a new scheme that the government have kind of just brought out. They trialled it last year. It's only available for new homes. And the idea is that we form part of kind of social housing and housing association stock. So every time a builder builds, he needs to give a bit of his development over for kind of social housing and kind of low cost housing. So this kind of falls into that, so it's form part of that. So it's only available on kind of new build schemes. You're better buy property at discounts of between 30 to 50%. So if the property's for 200,000, you can buy them somewhere between 100 and my quick maths about 140,000. That's brilliant because it means that you're buying a home with a big discount on. The downside is when you come to sell the property, you have to pass that discount on again. So, for example, you had a 50% discount and you bought the property at, say, for example, 200,000. So you actually only paid for the property 100,000. Potentially, when you come to sell that property back on again, if that property rises to, say, for example, 250, you don't be able to sell it on for 125,000. So you still get all of your capital uplift. But you have to pass it back on again to someone who's in the same circumstances as yourself. So the person you sell it to has to be, they have to be eligible for the scheme as well. So you can't just sell it to anyone. It has to be sold to someone who's also eligible for the First Start scheme. Yeah.
What is the eligibility criteria?
How many times did you practice the word eligibility?
I was really trying that in my head.
So the eligibility is you have to be 18 or older. You have to be a first-time buyer, so don't do it for everybody. It will vary greatly from kind of councils to councils, depending on how much discount that you'll get. So the majority of councils and housing associations, I believe, are going to offer some region of a 30% discount. So you can buy something at 70%. But they've reserved the right potentially to add on things like, for example, we like the people to work in the local area. We like preferably the people to be key workers, but because it's quite a new scheme and they've only really trialled it, there isn't a huge amount of kind of properties we're actually seeing this with at the moment. Hopefully we'll see more as time goes on, because I think it's a really, really good scheme. And enables people to kind of get on board still with kind of 5% deposit. So it meant that potentially, if you had the budget for maybe a 2-bedroom flat before, this might get you maybe into a 2-bedroom house with your discount potentially. So it means that it could probably get you, a bit of a bigger property rather than kind of, full ownership. So it's a really good kind of government scheme that's in place. So we haven't actually seen too many examples at the moment. And we looked out there, I couldn't find anything in the local area. The closest place I could find was a development in Colchester, which is probably about an hour's drive from here or so. So certainly in the south there's not a huge amount of developers to take us up at the moment, but we know there's going to be a lot more to kind of come when Help to Buy schemes finish and that sort of stuff. So potentially, as I say, we're going to look for, the council will look to prioritise people who are essential workers, who have obviously got to be first-time buyers, who potentially live in the local area, potentially on like lower incomes and those sorts of bits and pieces, basically. But as I say, it's all a bit up in the air at the moment. But first-time scheme, I think, will start to become more and more popular with developers. Some of the other schemes kind of fall away.
Yeah.
So basically, it's a really good scheme, and developers will be able to offer, say, between 30 to 50% discount. It just means it might help you get up into slightly better quality of home, or if you're really at the lower end of the market, it'll help you to kind of get your first home, whereas before properties may have deemed to be out of reach, basically. But it is only for kind of new build properties. It's only for developers that subscribe to the scheme.
What is Help to Buy?
So Help to Buy scheme, as I say, it's come to an end in 2023. So developers pretty much have to have the funds kind of ordered pretty much by the end of this year. Help to Buy is basically whereby if you're buying a property, so I'll make the figure simple. I know there's not much new build property around for £100,000. Let me make the figure simple. So based on £100,000 purchase price, you can put around about 5% deposit down, and then you get 20% Help to Buy equity loan. Out of that 20% Help to Buy equity loan, that'll be interest free for the first 5 years. Then after that, then you'll start to pay back a little bit month by month. We use 3% really as a worst case scenario. We think that's the average it's going to be over the term. And based on the £100,000, the help budget is going to be £20,000. That's going to work out around about £50 a month from year 6 onwards. So not a massive amount, but the benefits of that are going to be when any lender looks at you, you've actually then got a 25% deposit rather than just a 5% deposit. So if your rates will be a bit lower than what they would be if you just had a 5% deposit. So that's really, really good. That's only available on new build property, and it just means that potentially then you can get a really decent bit of help when you're buying that property. The plus side of that is the fact that when you come to sell the property, it can be sold on the open market, so you don't have to sell it to someone else on the Help to Buy scheme. There is an element of affordability in this, so they don't lend kind of 4.5 times your income. And when you come to sell the property, then, so say for example you bought the property for 100,000, and let's say for example you sold it for 100,000, Help to Buy equity loan has then gone from £20,000 to £30,000. From £20,000 to £30,000, so that's around about £10,000 extra you have to pay back to the government.
Yeah.
The benefit is you get to keep £40,000 of that, so remaining 80% of the uplift. So let's say the government give you 20% of the purchase price to buy it, and they just want 20% back when you come to sell it, basically.
Yeah.
So that's the Help to Buy equity loan that does end in 2023. So I think it's a really, really good scheme.
Next one I'll ask you about is the Right to Buy scheme.
Okay. The Right to Buy scheme is a government scheme. It's not available ever in the UK, so it's only really available in England. I believe they've actually stopped it in Wales and Scotland, so it's only England this is applicable in. Right to Buy is where they give you eligibility to basically buy your council home at a substantial discount. So if, say, for example, your property had, I don't know, a market value of, say, for example, £200,000, potentially you can be awarded a Right to Buy discount on how long that you've lived in the property and how much the value of the property is, and you can get a percentage as a discount. So the Help to Buy discount, the maximum is going to be is around about £116,000 in London and around about £87,000 outside of London. So lots of different bits you just have to bear in mind. You have to make sure that it is your own home, it is self-contained, it's got its own entrance and its own, it's a proper standalone home, basically. As long as you rented the property for a period of time, you may be eligible. Some really good kind of calculators to see whether you're eligible or not online, and the government have got a how can I buy my home calculator, which kind of works out the discount based on how long you've basically been there. And it's mainly based on how long you've been there and the property value.
Yeah.
So that discount can actually be used then as a deposit. So if, say, for example, you had, I don't know, a £200,000 home, your discount was £87,000, potentially then you can borrow the full remaining amount, which would be about £113,000, and you can borrow 100% of that with a lot of the lenders. Some lenders need you a bit of your own money. So potentially there's a possibility that you can buy your own council home with just the discount as deposit, which is also brilliant because it means that you've got a healthy deposit then as well. And the payments should be hopefully, roughly, more or less what your rental is at the moment, but hopefully gives you the opportunity to kind of own your own home. Yeah. Now, that discount is going to be in place for around about 5 years or so. And, the council said, well, look, we'll let you buy your home at a discounted price. But we want to make sure it is your own home and you do benefit from it. But we want to make sure that it does stay your own home. So we don't want as people, buying with massive discounts, just selling again. That's unfair for us. It doesn't do what you need, which is to basically give you kind of social housing and help you out in that way. So there's kind of a 5-year retention put on. So if you sell the property within 5 years, there's kind of a sliding scale of discount they'll basically give to you. So most council towns kind of buy their property, live in it for the rest of their term, will benefit from the increase in capital appreciation that they've got basically when the discount term ends.
Yeah, so if you sold it after only a year, you wouldn't get as much of a discount.
No, they would take back some of the original discount that they gave you.
Okay, yeah. Could you apply for right to buy if you're living in an ex-council home?
Potentially, yes, you can, but it has to be in what's called the preserved right to buy scheme. There'll be loads of kind of terms and conditions that if your property was sold on to, say, for example, I don't know, a public sector landlord while you're still living on it, but we don't come across those cases too often.
Yeah. Okay. What is right to acquire?
Okay, so right to acquire is a similar thing, but it's basically with housing association homes. So there the discount can be up to £16,000. It's not as high as the right to buy scheme, which can be up to £116,000. And the right to acquire is as I say, for housing association homes, and they'll let you have up to £16,000 as a deposit, as a discount towards your deposit, basically. So yes, there is some help out there for housing association homes, but it's just a little bit less than what it would be for council homes.
I don't actually know what a housing association home is. So what is that? What does that mean?
So housing association is basically it's not the council, but it's a charity which has been set up like a charity which has been funded in order to help social care and that sort of stuff.
Oh, okay.
So it's not quite the council, but it's kind of offers discounted rentals and that sort of stuff, and helps buy homes, helps to fill that gap between private landlords and between private landlords and the council, basically.
Yeah. Could you just explain to me what shared ownership is?
Okay, so shared ownership is basically where you own a part of the property. So say, for example, again, the property price, say, for example, £100,000. You can buy a share of the property ranging from 25% of the value of properties, say, for example, 75% of the value of the property. Your value of the property then acts as 100% of your property price. So say, for example, you bought something, 50% share of a £100,000 property, that's going to be around about £50,000. So of that £50,000, you need to find a 5% deposit, which is going to be around about £2,500. You need to find your legal fees as well. But say that share then becomes then your full property price. So you'd have to get a little bit of deposit on that property price.
Yeah.
So it's a really low entry. Just be aware that as well as your monthly payment for your remaining 95% of your 50%, you'll need to pay rental then on the 50% that the housing association basically owns. So sometimes with shared ownership, we find that maybe the rental, when it goes into affordability calculations, actually is a little bit hard. So sometimes we find that with shared ownership, maybe the rental and also the mortgage amount, something that comes to about the same as what a full mortgage payment would be. But not everyone has the affordability for both, basically. But the shared ownership is a brilliant scheme. It's mainly for kind of new build, but you'll also see second-hand shared ownership as well. That means you can buy a second-hand shared ownership scheme property. All that will basically happen is you pay your mortgage as you normally would, deposit from 5% of your actual share amount, and then you have to pay rental on top then. Sometimes there are ground rent and service charges you'll need to pay as well, and that'll all come out of your kind of overall affordability. When you come to sell the property again, you'll need to sell the property to someone who is eligible for shared ownership and someone who wants to buy a share of that property. With shared ownership, you can staircase up as well. So that means that you can start off at maybe a 50% ownership, and as time goes on, you maybe buy a little bit more back, a little bit more back, a little bit more back, until you fully own the property.
Yeah.
And then when you fully own the property, then there are no kind of, other market conditions or bits and pieces, other kind of information you have to take into place when you come to sell that property that's fully then your own. But you're able to staircase, which means you buy a little bit more and a little bit more and a little bit more of your property as you go along. So it's a really good way of kind of getting you onto the property ladder now. And as time goes on, then hopefully, we're going to push you up to kind of full ownership of the property.
What homes can you buy with the shared ownership scheme though?
So potentially, shared ownership scheme was essentially for new build property. because they can make sure they're built to a certain standard, they're built to a certain quality. If housing association's got to pay up 50%, up to 75% of the property, want to make sure the property is going to be a good standard quality of property. This scheme's been around for a little while now, so what we're starting to find is it may be available on new property, but you'd also find a little bit of second-hand property that comes on as well, which is shared ownership. So it is possible to buy a second-hand shared ownership scheme, but from a property that's already in the scheme. So, for example, you couldn't buy shared ownership. You couldn't go out and find a property on Rightmove, for example, that was for sale, an old bungalow, for example, at, say, for example, 300,000, and then ask that to go on shared ownership. So it has to be a scheme that was either put on by a new build developer, or a scheme that's come onto the second-hand market that's already shared ownership. So it'll be one of those two that are already kind of within the scheme. But there's some great opportunities to buy second-hand properties with this scheme, whereas a lot of the other schemes are for full-on new build property. So I think it's absolutely brilliant value, and it means, for example, for some clients, especially if they've got a family, it means that you can actually get up into a property maybe which has got a garden and that sort of stuff, because whereas before your affordability may only have been kind of one bedroom flattish. So it really helps out in terms of the amount of property you could buy, and own a property from just 25% of the actual full market value of the property is brilliant. Which is to make sure the affordability is there though for the remaining 75% for the housing association.
What is the Help to Buy ISA?
So Help to Buy ISA is an ISA that's kind of coming to an end now. So unless you've had one already, that is going to be, you won't be able to kind of subscribe to that now, because that's now coming to an end. A lot of those have been transferred over now to lifetime ISAs, which you're probably going to ask me next. But a Help to Buy ISA is basically whereby you can save up an amount for a deposit, and the government then will add on a 25% of what it is you've saved up inside an ISA. So say, for example, you've saved up £10,000, the government could contribute another £2,500 to use as your deposit to buy a property. That could be a new property, that could be a second-hand property. There's no kind of, there isn't any stipulation that has to be used on new build or whatever else it is. But I'm afraid that scheme's coming to an end now. So if clients are looking to purchase now, they're probably going to be looking at a lifetime ISA.
What is a lifetime ISA?
So a lifetime ISA works very similar on Help to Buy ISA. You can put a little bit more money in there. So the Help to Buy ISA, you can only put in £250 a month. With the lifetime ISA, you can actually put up to £4,000 in per year, which is absolutely fantastic. And the government will give you up to 25% additional top to then use then as your deposit. Which is absolutely fantastic. You can have a lifetime ISA between the ages of 18 and 40, and it can be used then towards the purchase of your first home. Also, the restrictions on that aren't quite as harsh, and you basically be able to go up to around about £420,000 property price in London, and a little bit less in the rest of the UK.
Are you able to withdraw money from the lifetime ISA at any point?
But potentially you can withdraw your money anytime for a lifetime ISA if you really want to. The downside you'll get of that is you'll end up losing your bonus potentially. So if there's something that you want to work up towards and helping you have 25% extra in your deposit, so I would recommend that you leave, but you don't have to if you don't want to.
Okay, that's all the questions I've got for the time being.
Okay. Well, thank you very much, Adam. It's been hopefully there's been, if you'll know any more about any of these schemes, we'll run kind of individual longer videos using examples, but that was just really a bit of an overview of the different types that are available. So what we'll do as time goes on, we'll look to do, what we'll do is we'll take one of these probably each week. We'll do a series of these over the next couple of weeks, and we'll do is we've kind of worked out examples, because now I can kind of draw examples on the board and give you a bit of an idea of how it all works. That was all okay. Thank you very much for today. Thank you very much for joining us.